Fed day, just after 3 p.m. on Tuesday the 16th. Thumbnail for today. Fed is making a mistake. Are they? Should they do nothing with rates tomorrow? Should they cut rates like the market expects? 96% probability that they're going to be cutting rates. Let's see what we have. We did poke some all-time highs again today. We've retreated off those highs a little bit. We're kind of back into the halfway point based on today's range. So we were SPY opened higher at all-time highs, down, back up, or right at the halfway point. I do have some trades running into the end of the day. Let's see if I can get lucky. I've got a chart alarm set here at 20. I'm going to set a chart alarm here. I mean, realistically, my break-even price is probably around, I think, 18, maybe 1850. I'll check and see what this price gives me. So I'm trying to get to 20. If I get to 20, that actually make me quite happy. 66.20. See if we can get a run there towards the end of the day. Let me check my P&L right now. So 223. So I'm up about $100 in this one, down 124 on this one. So I'm about break even on my double up trades. I don't really want to take both losses because if I sit here at 15, it's not great. I need price to get to 16, 17, 18, 19, 20 to see this call fly show me a little bit more profit. So hopefully a bit more of a run into the 1750s, 18s, 19s, 20s is good for the rest of the day. Net, I'll just go ahead and set this one at, let me try $3. I'll try $3.30. I might just have to edit this along the way. So I'm setting that take profit at $3.30, which would be $200 on one, and then a loss of $125 on the other. So we'll see if we can net out a few bucks here, but I'll keep a close eye on this one as I'm watching my other screen. Or I just close it down, take a $30 loss max, and don't let it get into a dead zone. I mean, if it comes back down to 10, that's no bueno. So maybe the smart thing is not to risk it. Just take the $20 loss. Let's see. See if I get 225 here. 225 credit. Maybe you'll be generous. Of course not. Of course not. Let's see. There we go. There's 225. Come on. So 220. What's my debit on this trade? This is a 20. All right. It's got $100 on that trade. So let's see what the rest of the day gives us. I'll watch. I mean, I'll see how this thing finishes for the day. So I'm taking some profit. I can't risk more than $25 right now, and I'll see how the rest of the day goes. This might offer up more. If we're up to like 66, 18, 19, 20, then that offers up. 25 is perfect. 25 would be ridiculous. So I'm going to keep an eye on that one for the rest of the day. If it comes back down to 10, then I'm only risking about $25. So we'll see. Risk it for the biscuit. You got it, Adrian. All right. So tomorrow is FOMC day. Is the Fed making a mistake? Will this be a short-term top in the market? You know, buy the rumor, sell the news. Price action is what really matters. This market has been melting up higher, hitting all-time highs again and again and again. I found a nice trade today that I liked. I took today. Did a 2-day masterclass for my daily profit play. So daily profit play today, we finished a day 2 workshop, took some nice notes. I shared those in Telegram. So masterclass notes right here and right here and right here, explained with some of the strategies we deploy. You know, check it out in your classroom. That's for members. And I posted a trade live today. It's a 9:30 expiration with a pin price at $67.60. So I'm doing a broken wing butterfly. Pulled in $1.05. There's $8.95 of risk, potentially $1,000 profit trap. So if we get into that like 10-15 delta, that's offering $1,000 by Tuesday the 30th. So we might get very lucky on that trade. We'll see. Let's take a look at what else is going on. So market's pretty much flat on the day. Futures still a bit confusing because of that big gap from September to December. So markets were up, but S&P barely budged. So we opened higher, We're right back in the middle. Maybe I can get lucky if we come back into these lows. Maybe I'll set a chart alarm down here at the low. Price might just go nowhere, right? Either if we hit this level, this is pretty good. I'll put a smiley face. Where the heck did my drawing tool go? There we go. So I'll put a smiley face right here. Or not. Apparently my Epic Pen doesn't want to work. All right, so anyway, that level makes me happy. And that level makes me happy. It's a bit of a dead zone in between. So I'm trying to make sure I can manage price a little bit aggressively into the close. So either we come down to, maybe test today's lows. We come back to try to sniff out today's highs. I've got a couple of butterflies sitting there for my double up service. Okay, what I'm watching on real end is 66.15 seems to be the largest gamble level coming in right now to the close. We'll see in the next 50 minutes if any of these fill up to like the 05 or 6600. Anything below 6600 is a trap. So 66, let's say 65, 99, 98, 97 if we end up breaking some lows on the day. But I would imagine that most likely for the next 50 minutes, not much is going to happen. But we'll see. So I'll keep things interesting here for the next 50 minutes. Like I said, Daily Profit Play Masterclass was great. New trade is in, posted in your tracker and in Telegram. It's a broke wing butterfly for $1.05. We have a broke wing butterfly. I've got a lot of trades running here into FOMC, so I'm taking some risk-defined trades. I'm taking some stabs. Let's talk through them really quickly. So up to some fresh highs again today. No complaints on that. This is a butterfly. This is a butterfly. Watching those. Here's a broken wing butterfly. This was out to Friday. So if price is lower than 66.40, we'll have a nice little winner. This is at risk because certainly with whatever volatility we get for FOMC, we could easily go up to 6,700, or we actually do signal a bit of a top and the market maybe drops 100 points. I said this morning in Daily Profit Play. If price on the SPX is below 6,500, that might start triggering some negative gamma flows and options, and we might drop towards the 50-day moving average, which is what I've been watching for the last couple of weeks, thinking it's got to hit it. At some point, we've got to hit that 50-day moving average, especially when price is going higher, melting up higher. I think it's going to pull back and hit it. So I'll just throw it out there. I think this is my little SPX forecast, or index forecast, I suppose, for FOMC. Right? FOMC is likely going to bring a lot of noise, a lot of volatility. The VIX is 10% off these recent lows. Okay, we're 11% off the lows, and for 2 days, price has done nothing. Okay, look at this open to close. So yesterday's open, despite the gap higher, the open was 66.07. The close was 15. That's an 8-point move from open to close. Today we opened at 27. We're at 13, 14 plus or minus. Right? It's a 14-point move. So despite the VIX going up 10%, S&P has gone nowhere. Right? Plus or minus like 10 points on the day. So we're bringing a lot of volatility tomorrow. What does make it interesting coming into FOMC for Wednesday is I would imagine that either Wednesday or Thursday or Friday, one of those 3 days, we're going to get some decent direction. I don't know which direction. I don't really care. I do actually. I want to see price go lower. I think price going lower, at least from the technical side, makes some sense. But I want us to be ready for something like this. If the market gives us a big fat, let me see if I can just get out of this thing. If we get a big fat indecision candle, okay. So let's say we have this huge indecision candle. Let me go a little bit thicker here. So we have this big indecision candle, right? So if we go high, low, indecision candle, what I'm going to look for is that essentially establishes a key range that price is either going to top out with, or it's going to put in a bottom, and if price breaks the lows, measure that move lower. If price breaks higher, measure that move higher. Make sense? So let me go back on all these drawing tools. There we go. So I'll do that again. Let's say we form a big indecision candle, and I'll just box this in. So we have a huge indecision candle. right? Like that. So what I would be doing in an indecision candle, again, we'll talk about this more tomorrow. I'll be live tomorrow. We'll get through FOMC. From high to low, if price ends up breaking the low or breaking the high for that matter, just take another box and measure and move. So if we have this as the candle, I'll just take a measured move like this and say, okay, we broke the lows. Where do we go? That's a 50 and a 100% move to the downside. If we break the highs, then there is a 50. Okay, right here's a 50, right here's a 100% move to the upside. Does that make sense? So if tomorrow FOMC, it's just a big fat indecision candle, then we wait for the breakout. And maybe it's after this week. Maybe it's going into next week's trading with a fresh week post FOMC. Maybe it's the end of the month as we're wrapping up the quarter. But a breakout up or breakout down, we will see where prices go. I think this market is pretty overstretched technically. I am surprised that the VIX has been going higher this week by 10+%, 11+%, and yet markets have stalled a lot these last 3 or 4 days. So little day today, little day yesterday, little day on Friday last week. And I mean, this is just like this slow melt up grind. Okay. 90+ bars since we've had a breakout above the 50-day moving average. So right here, last time we touched it was May 8th. So May 8th to present, that's 90 bars away from the 50-day moving average. Point wise, we broke some highs today, 244 points. I don't see this stretching very often. You can go back a lot of history. I'm actually working on some codes from like 1990 to now on how extreme we've gotten from a 50 period, 100 period, 144, 200 period. And I don't see a lot, two levels. I don't see a lot that stretch over like 50 bars. And I don't see a lot of price action that gets above 250 points higher. So when this was, the pullback from July to August, that pullback July to August, we were about 280 to 90 points above the 50-day. So we had a correction towards it. Right now, obviously it didn't stay, it didn't stick, it didn't hit the 50-day. We went up to all-time highs again, and we had another pullback here. We were sitting around 260 points above it, and we pulled back. So this kind of same thing could repeat itself, where now we are looking at, there's 212 points, and now we're back up like 250 some points. So I wouldn't be surprised at 250, 60 points higher than the SPX, and putting in a bit of a top with a catalyst like FOMC, that we don't go too much higher than, let's say, 67. And I think if we go to 67, I think 65 is a good level of support. If we break 65, I'm just saying watch out. If we break 65 for the short term, watch out to hit the 50-day, watch out to hit the 100-day. I really would be confused if the market can't even pull back 3, 4, 5%. So it doesn't mean that I'm short. I'm just waiting to buy dips. I'm waiting to deploy capital. I'm waiting for waterfall income so I can start buying some dips and positioning for a strategy 1, strategy 2. I'm waiting for something in double ups that I'm liking. I mean, pinch point took 3 live trades today. Crash insurance. I'll keep hedging, I guess. But my hedges are out to December and out to April and June of next year. And those are very cheap hedges that pay me 10 to 1 or 20 to 1 or 40 to 1. I don't need those other than if I need them, I'm happy to have them. So we'll keep adding those, but it's a tiny little risk. But everything else is allowing higher highs. I mean, this is a fresh high in the day at 550K. It has not been a bad melt up. I will say that. I don't know where I mean, if I keep enjoying the melt up, maybe my highs for the year could be 650 to 700K. That's not a bad year. But I want to make sure that I'm not getting just blindsided by a bunch of risk. That's all. So we'll see what happens. But I'll be there right with you every step of the way. I just think if you're getting a big indecision candle tomorrow, which we'll come back to the final hour session tomorrow and discuss. But if we have an indecision candle, expect that to offer some type of master candle breakout. Look at a 50 to 100%. And you could do 2 things. You could measure the 50 and the 100. You can measure the 100 to 200. So you just double up on those boxes. We'll do that again tomorrow. But I think correction wise, I mean, either we blow the top off and then we fade after. I mean, something like this, if it's like a, Google type trade where we blow through the tops here and then we start to go sideways and fade, or it's a, NVIDIA run where we just move higher, start to roll over, or it's an AVGO, which is where we blow the top off, start to stall, and then maybe revert and fill some gaps. I mean, like every stock from the bottom of April looks like this. We've barely hit a 50-day moving average. We are still so far away from the 21 period on a lot of these stocks, So it's just looking for a little bit of correction. I mean, Oracle, big news in Oracle. I mean, just a 40% move in earnings is insane, especially for a $650 billion stock that's now, 866. It was over $1 trillion there for a split second when we had a 40+% gap higher. So, and that was way bigger than expected. I mean, I did the Oracle earnings calculation, and market maker showed about a $21 move. I calculated out with earnings about a $28 move, and it moved up over $100. That was a $103 move. That just completely shattered. And again, I think it's more, look, it missed. It's just a freaking coin flip. It missed on earnings, and this is up 40%. So just crazy stuff. I don't know. I mean, I guess it was demand, demand, and whatever. This market just can't get enough AI hype right now. So anyway, crazy stuff. Back then, my strat for days, buy and sell stops. It's profitable. I stopped when both hit stop loss during a Fed day as well. And what currency, Adrian? You tend to come into these sessions and bring a lot of FOREX talk. So it's a noisy day. Yeah, I mean, FOMC is definitely a noisy day. You can tend to get filled on the upside, downside. So what I might end up looking at tomorrow depends on what price action gives us. But if we have, price in the middle, and I can get something to the upside or to the downside, or in my daily profit play, we might look at a trade that offers up, a dead zone right in the middle, and a price goes higher. The nice thing about tomorrow is a lot of the volatility is going to be at 2 p.m. So I could place a trade in the morning and come join me tomorrow morning for the daily profit plan at 9 a.m. and opening bell we'll get a trade in. I'm going to price out. It's going to be kind of my reverse. It's going to be my reverse daily profit play strategy, and that means that I have a little bit of a dead zone here for maybe 15 to 20 points. As long as price by 2 p.m. or after is going to push higher or lower, I should be able to see some profit rolling in. So I just want to see what type of fill I can get. If I can get example for me, it'd be a $5 wide spread. If I can get like 6.10, 6.20, even $6, it's okay. I risk 4 to make 1, but the probability of profit in that 1 is pretty high because I think even from 2 to 2:30, so that's the news to the press conference and the press conference to close. I mean, Powell's probably going to be talking from 2:30 to 3 o'clock. He'll come on at 2:30. He'll read his little statement, and he'll take some Q&A. And usually he's wrapped up shortly after 3 p.m. The market is highly anticipating a rate cut. It is pretty much baked in. I think if there's one thing I could tell the future on, it would be that the Fed is going to cut by 25 basis points tomorrow. This tool has not been incorrect since 2009. It changes a lot. The futures market can move, but the jumbo cut, the big surprise, I don't think the Fed's going to do that. It'd be pretty impressive if they did. I just don't know if the market's going to like it. I feel like anything the Fed does that's not 25 basis points is going to shock the market. I don't know if it's good or bad. So they're probably just going to do 25 basis points. I think the tone of it will be interesting because if it's a reluctant type cut, like, hey, look, jobs are lower. We realize this is showing us numbers. There's immigration this, there's tariff this. There's all sorts of bullet points. But I just listened to an interesting podcast that basically fiscal dominance is so strong right now that the Fed is almost neutered in the markets. All the Fed can do is dial up or down some interest rates, but they can't control the long end of the curve. The hard part is even when they cut rates aggressively, you still have more fiscal dominance. And if the government wants to spend more, it blows the deficit out even further. So this is a very slippery slope / thread the needle environment. And look, we're at all-time highs in the markets. We're all-time highs in gold, all-time highs in Bitcoin, most unaffordable housing market ever. We've had some of the highest rates on record in the housing market. And like I said, most unaffordable housing market, and yet we're cutting rates. Now, is this something that's going to help the middle class, or is this going to make another wealth disparity gap where there's basically like a rift in the middle class? Either you can afford to recognize that you have to participate in these markets and invest to keep up with the debasement of your currency, or you're the middle class that doesn't participate and you just fall further behind. And I think that middle class rift, if it gets worse and worse and worse, will ultimately lead to some interesting policy change and probably some voting pendulums. Because right now it's like we're I'd say on a right wing or left wing, we're probably pretty far right. If people are just upset and disenfranchised, getting left behind, then they will vote left. And unfortunately, nobody votes for the center, which is where I think there's a commonality in common sense. But it's like that party doesn't exist. And so you've got to choose one or the other, but neither party is responsible. Both parties spend a ton of money. Both parties spend money. Both parties add to the deficits. Both parties are right now, we've been running since Biden. You could probably go back to Trump's first term, even Obama's terms. Fiscal dominance has played a part. And these last, 5 years especially, it's been really extreme. So we're running the economy hot, and the Fed is going to be cutting into a want growth agenda. But what does price think? Well, it's run up high enough. What does it do from here? We're going to find out tomorrow. And so all the waiting, all the anticipation, all the drama, we'll find out tomorrow. So what I am looking forward to is let's get this out there. Let's get it let's get it hot off the press. Let's see where price settles. Let's make some good informed decisions. No more speculating, no more grasping, no more guessing. Let's see what we get tomorrow after the dust settles. Whether the market is up or down, we'll make an assessment. We can measure some moves from there. I think technically the market puts in a bit of a near-term top. I think we have some pullbacks. Volatility is up a decent amount. Off these lows, we have had incredibly suppressed volatility for the entire year. Outside of a little ventilation, this would have been in early September. We jumped up to 19. Before that, we jumped up to 21, 22 near the very beginning of August. And then since then, it wasn't until you got to go back to March and April to see volatility, right? Here's back in June. I don't even know what happened in June. I can't think of June doing anything other than going up. How to get up to, how do we get a 20 VIX in June? I don't remember. Markets have going higher. I don't even know what that was. Here is May. Does anybody remember VIX in May at 25? I don't. I guess May a little bit like post Liberation Day drama. We did have some, rise of conflict in the Middle East, geopolitical tensions. We had the U.S.-China trade agreement gap. So I guess that's part of the reason. And then before that, you're going way up here with Liberation Day and the decline. This is Liberation Day. So there's all your VIX drama early this year in March and April. U.S.-China trade agreement gap, maybe the Middle East conflict. And that's it. There's not much to get excited about. It's been very suppressed volatility. If we get another break above 20 in the volatility index, I think this could probably go from a 20 to 25, 25 to 30. And, I look at that as an opportunity to buy dips. Okay. World Trade says if FOMC doesn't put a top in SPX, then something will. Is that what's SOFR? Retracement on dollar currency, big move FOMC. Yeah, I'd say this. Indexes at all-time highs, gold at all-time highs, Bitcoin near all-time highs, real estate market most unaffordable, dollar index near 9-year lows, or like 40-year lows or something. It's like the worst start in the dollar in 40 years. So bonds have had a pretty impressive rip here these last couple of weeks as well. So I'm just saying, like this, if there's ever a market crescendo, this is kind of it. It's like, and again, what does this all add up to be? It's just a big buildup of uncertainty. And then once we get it in the markets and prices going all over the place, we get to figure out what to do next. So it doesn't mean we have to make decisions right now to play this. I'm not actively buying dips on anything right now unless I can position for something way the heck out of the way. I looked at a trade today on Cigna, and I tried to get filled at like a 240 credit on something that was a pretty good mechanical trade all the way down here towards COVID lows. And it offered a good looking trade, but it wouldn't fill me. So I think I put this in CI, it canceled. Let me see if I just have this in here for canceled. Yeah, I mean, look at all. I try to get filled at 240 all the way down to $2, and it never took my trade. So I wasn't going to accept something like mediocre. I thought, oh, if I'm going to get a 10 wide profit trap with about a 90% chance of profit, I like the trade, but I'm not going to take it if it's a mediocre credit. So anyway, I'm looking for trades. I just want to make sure I'm giving myself plenty of room. Oh, I see here. And still, like, we don't know that, right? We don't know if SOFR is going to do it either. Is it something in the bond market? Is something in the dollar? Something with yields? We don't know. I mean, I think right now it's like everyone's been talking about exactly like the SOFRs and the credit spreads. What's bonds going to do? I mean, what's inflation rate going to do? The market doesn't care. I mean, I'd say what's going to matter the most as far as watching for correction. Look, I think we're going to get a correction. I don't know the why, and we can finally attach one when it happens. But what I'm saying is the price that matters is if price takes out this low at 63.60 or takes out this low at 63.40, then price cares. If price falls to the 50-day, price cares. If it takes out the 50-day and takes out this low, maybe that's a sweep. So high, low, lower, high, lower, low. And whatever the catalyst is, it's probably going to be the Fed. It's probably going to be something after the Fed. It could be end of the quarter. It could be, maybe a terrible print for non-farm payroll the first week of October. I don't know. Okay. But whatever it is, we'll be here to talk about it. We'll be here to figure it out. What I am looking forward to is whatever we get correction-wise, I am interested in using some of the strategies that I trade in waterfall income and also my scan trades in pinch point, because what we will have is volatility. It's open season on volatility from September to December. Let's see if the market give us some movements. I've got some pinch point trades that are, coiled and consolidated, and hopefully the next 60, 90, 120 days give us some nice trades that hit my 30, 40, and 50% take profits. It's all I need. Give us some direction, right? Waterfall income, let us position for dips with 10, 50% room for error. Daily profit plays, let's grind for some daily income. Maybe VIX goes a little bit higher. Okay. All right, dollar index. Yep. I did talk about this. I've said, look, I don't think we should be selling the dollar. I know that this has had a run to the downside. Again, call me a contrarian. This is not the trade that I think I want to take. To me, if anything, this is a trade that the dollar tests this bottom, maybe fakes out the lows, and then goes back up for a squeeze trade. Okay. I don't see the dollar being super weak or returning to a trend to the downside. If anything, I think this market maybe pivots hard at these lows or has a test and fake out of the lows, and it's a bear trap and the market squeezes back up. If we have a risk off trade, I think the dollar catches a bid. We fake out to the downside. We go back up. Dollar goes up. I think gold goes down. I think the equities market takes a little bit of a breather. Maybe we have a 3, 4, 5% correction. I think that, to contain the bears, I think the market has to, go no more than like 10%. If we have a high to low of 10%, that's a good correction. It's a nice little volatility retracement, but going greater than 10% might be a little scary. Going 5% is going to feel bad. Going 10% is going to feel terrible. But I'm telling you, like the rally you want to see is the market shouldn't go much lower than like 10%. If it's an immediate buy and dip at 10%, it's a good trade. That could be a fake out in the dollar, going back up to revisit the 100 to 101 level. In bonds, if the dollar catches a bid here, I'm curious what TLT does. TLT is up to 90.33. How much higher do we go? I don't know. I'm out of my trade. I dumped all my TLT. I'm looking elsewhere for using some of those profits. But I mean, are we going to have a monster run on the bond market? I don't know. Probably not. I don't think that bonds look that great unless, I could see potentially a squeeze up to like 94. I could see a squeeze up to 100, but I wouldn't imagine that going up in TLT to 100 looks great for equities. If we have that'd be an aggressive rally. If we rallied up to 100, I mean, that's another 10% on top of these lows. That's like a 15% rally off these lows, right? I mean, yeah, man, that's like a 20+% rally off those lows. I don't see that being a good thing for equities. Okay. So let's see. Mike, what you're saying there, CI should fill now, down $3 today, VIX spiking. Yeah, but I mean, I tried, man. And again, do you know the trade that I was putting on? I was doing a ratio spread out to June of 2026. I mean, I was going quite a ways out of the money, willing to own some shares. It just, I think I put it down like 5 cents at a time from 240 down to $2. I still didn't get filled. So I don't think it's going to get filled. I'll circle back to it. There's plenty of time to look at that trade. Dollar chart, interesting. Yeah, I just don't think it's going to go further. I think if anything, the dollar is going to be I mean, I could be wrong, but I think this is a fake out trade. I think the dollar having this big of a trend, if anything, I see like a flat pattern, something like this, where we're down in the trend, a little sideways range, and then we resume. As far as like positioning, I think we resume the downtrend, but it's after we have another pullback. So I could see like a 100, 101, 102. Obviously all this firm resistance, that what was nice support becomes resistance. We didn't even get there. We had a little bit of a pullback through this June to August window. But if we have a fake out of the lows, I could see the dollar catching a bit of a bid. Okay. Let me see something here. I'm just going to check my SPX really quickly because this is closing up here in about 30 minutes. This trade is now, I mean, I'm profitable on the day. I could just take it. Could and should just take it. I think I'm going to. That'll give me a net. That'd be 100 minus $50. Let me see if I can take this one and just make a winner on the day. So closing, 75-cent credit puts me down about $50. Maybe I can sneak this thing up to like 80 cents credit. Yeah, it's a little bit smaller loss. Try it here. Come on, prices. Push down a little bit lower. I'm going to take a small win on the day. Let's see, that debit was 35. Come on, offer me 80. Got to fill the 80. Okay, so this is for double ups. I'm closing out the trades. Putting this in for an official trade. Diana, so double up. Trade management. Call fly. Close at 225 credit. Put fly. Closed at 80 cents credit. So a nice win on the call fly. Small loss on the put fly. I'm curious if price will pin end of day, but not taking the extra risk. So I'm just going to close that out for profit. That is in my double up. So $1.25 close out for 225 credit. This one close out for 80 cents credit. Okay, so this is, I'm just going to update this in my tracker, 80, 135. That's a 40% loss, and then the 100, so I have equals 225 minus 125, 125. So I had an 80% winner and a 40% loser, net, walking away with some bucks. So I'll take the winner. All right. So survive that. That's fine. Make a few bucks there. Broken wing looking good. Broken wing fine. I like the positioning. It's obviously like this one. This one's probably the most at risk as far as if we don't have a top put in place this week. My 6640 does have some risk. This one out a little bit farther, but it's at 66.85, looking a little bit better. It's only down 40 bucks. This one's out to next Friday, not this Friday, at 67.65 for $1. This one's, I think, unless we just rip higher on the Fed, this one's going to look good for some profit. All of my call trades, this is a top at 66.40 by the end of the month. I'm hoping that's okay as well. I think we can come back to 6,500, see if it offers support. Maybe we break below it. We hit that 63 zone and hit the 50-day moving average. Broken wing here at 67.60, broken wing here at 6,700, and then all of my strategy twos, these are all in some profit. 50% profit there, 36% profit there. This one's pretty new. This one's only been open for a day. So yeah, I opened this one yesterday for class and waterfall. This one's up 14%. So those are all fine. Okay, let's get back some comments. Double A game, if you try to learn new fundamentals. Oh, it's been 3 years I'm trading, but still on profit line tips. I mean, where do you want to start, man? I mean, what do you want to trade? You want to start in Forex? You want to start in stocks? You want to start in options? You trade in futures? I mean, we're looking to start somewhere. I mean, I've got plenty of stuff to get you started. Go to my YouTube channel. Best place to start is just free content. You know, you go into Trading 101, and I have an entire playlist on all these things. Equity management, a bunch of trading education videos, support, resistance, leverage, managing risk, adding to winning trades, using trend lines, using price patterns, all different asset classes. So you can start somewhere, at least grabbing some education there. If you'd like some more concentrated education, I do a lot of trades in options. I run some services here with Prosperity Pub. I trade every single day on the indexes. I trade every single week on the indexes. This is heavy earnings trading. This is index trading and Mag 7 trading. These are scans that are high volatility expansions. This is hedging my portfolio. This is the kitchen sink, whatever it takes discretionary approach. The quick guide is a $27 course to get you started with options. I built that for my nephews. They know nothing about trading. Now they do. I expanded that into a full course. Same thing. You want to go quick guide first to get a basic up, down, sideways directional guide. You want to expand that out to 13 of my favorite option strategies. That's a good place to start. Okay, I only traded Forex and gold. Okay. And that's, I mean, again, it's fine. But what happened? If you only trade Forex and gold, what happened? How have you not made money trading Forex and gold? Forex I can understand because there's no, I mean, Forex is a trader's market. You know, you over leverage, you over trade. I mean, Forex can be a beast. Forex could go 10 years and have no gains, no trends, no anything. Gold, even if you've been staring at gold at all for the last 3 years, if you were a buyer, you've had a lot of gains, you know, but it depends on your timeline. Did your trades, are you too short term? You need to go a bigger picture. You need to swing trade, but you know, it's nice to have something with a bias. Gold's been up aggressively this year. It's been one of the best trades of the year so far, besides individual stocks that have ripped since the bottoms in April. But gold's been a steady bull market and has been for the last couple of years. Okay. So anyway, I mean, there's a lot of places to start. There's a lot of places to start. If I can help in any way, shape, or form, let me know. You can check out stuff that I've got on YouTube. I've got lots of them, right? So just type in Trading 101. I've got a whole playlist called Keep It Seriously Simple, and hopefully it helps. I used a lot of these videos talking about currencies and trading and technicals, and I do a lot of stuff now if you type in options. So you can type in options 101. And I've got covered calls and turning winners or losers into winners. I've got strangles and straddles. I've got long calls and long puts, and I've got credit spreads. And there's plenty more, but you know, a lot of these services have bonus education and full classrooms from, you know, master classes to all the strategies and strategy guides. So I build it out for my members. Let's see here. How many trades do you take a month? I have no idea. I can tell you right now that I've taken about 25,000 trades for the year. I know that because I see what I'm up for year to date with fees. I'm up about $532,000 for the year. And I know that from my difference, I'm seeing about $15,000 in difference. So $15,000 in fees at a 60-cent contract. That's 25,000 trades for the year. Last year, I was about 40,000 trades. So, I mean, I'm active. And the nice part is fee wise, like Tasty takes really good care of me. I'm paying, 60 cents entry only, not exit. So it's better than Thinkorswim. If I did the, 40, 50 cent Thinkorswim and it was in and out for 80 cents or a dollar, I'm beating that with Tasty with the 60 cent entry only. But they also, they reward me because I'm a very active trader, and I'll have some accounts to look after too. Okay. Do you trade fundamentals? I mean, that's a blanket term. I trade probabilities and technicals. I would say I'm a technical trader in Forex. Fundamentally, I'm looking at like the big picture. Are we in a bull market, a bear market? That's a pretty common answer. Are we in a bull market? Cool. Let's buy everything. And position accordingly. Like just, I don't just blindly just throw something, I'm going to buy this. It's like I have plans, but I take a lot of trades to generate the income. I prefer to take trades that I don't have to own anything. I like doing a lot of option trading where it's synthetic. I don't have to own the underlying, and I can just generate income with the mechanical trade itself, where the option goes, expires worthless, and I make credit or income on the trade. Okay, I do have shares. I mean, I've had shares of a lot of things. I have shares. Looking through my portfolio here, I have shares of Alcoa. I've got shares of Apple. I have nothing in Amazon. I have shares of Alibaba. I have shares of Baidu. I have shares of BITO. I have shares of IBIT. That's gold and silver. I have shares of Qs and SPYs. Yeah, I have some shares. I would say maybe of all these positions, I might have 10 of these symbols with ownership. The rest is mostly just option trades. Okay. So fundamentals, I mean, I think fundamentals is the theme. In the stock market, are you bullish or bearish? And the easy answer is be bullish, right? The easy answer is be bullish because 55% of the time the market's up. We've had way more bullish years than bearish years. We've had much longer sustained bull markets than we have bear markets. Look, it is in the country's best interest. It's in the global economy's best interest to keep this party going as long as possible. So this whole idea of, there's a $40 trillion debt bubble and Ray Dalio making all these terrible threats and it's going to be this major war in the changing world order. I get it. And however this goes and however it ends, it's probably going to end badly. But the problem is it doesn't have to end. I think there's too much to be gained for keeping this party going. So don't forget that monetary policy and fiscal policy working together, aligned for the same goal, goes right into John Maynard Keynes' famous saying, which is markets can remain irrational longer than traders can remain solvent. So being a bear in a mostly bullish market is insane. And being a bull all the time, if you give yourself a time horizon, is probably going to be fine. The only time traders get in trouble if you're a bull is if you're buying highs with everything you have invested. If I were to say right now at the SPY, if I want to buy shares of the SPY and the SPY, and I said, okay, I'm going to put in all of my money right here at the top. Well, if you have no idea how to protect that position, you're going to hate the fact this market might pull back 5, 10, 15%, right? But if you give this market 5 years or 10 years, you're probably going to be okay. In fact, there is not a single run in the market at the worst possible top. Okay, you can time this market as bad as anybody else in history. And if you give yourself a 20-year horizon, okay, a 20-year horizon, they've made money through that entire 20-year stretch. Even if you bought the absolute worst top, the top before the Great Depression in 1929, the top before the 2008 bubble, right, or the dot-com bubble in 2000, 2001, the Great Financial Crisis in 08, 09, the top before COVID, doesn't matter, right? If you give this market 20 years, they've made money regardless. So, but not everybody has 20 years. So what I'm saying is, I don't like to throw everything in at one spot. If I'm going to invest, I want to make sure that I'm investing in levels. Do we pull back to levels that I can buy cheaper? Do I buy discounts? Do I think that the S&P can go to 1,000? Right? How many of us think that in the next 10 years that we could see the SPY at 1,000? In the next 10 years, right? How much is that right now? If we go up to 1,000, that's another 51%. Okay. We've already gone 37% from this year's bottom. So it's absolutely possible that the market can go another 8% a year for the next 3, 4, 5 years, get up to 50+%. The SPX can be at 10,000. These are all very realistic numbers, but you got to give it time. There's going to be some bumps and bruises and volatility along the way. So, it's just embracing a trade strategy and making sure that you know your risk, you know your reward, and you put in a lot of trades. My winnings have not been because of one big win. My wins are because I trade often and I manage risk and I take a lot of winners. And that's more my style. So that's what I'm good at. That's what I've done for a lot of years. And that's what I keep doing. All right. So anyway, for AA gaming in the chat, again, check out some of my videos, come back to these live sessions, give us some feedback. Let us know how you're doing. What can we help with? We got a lot of good traders in the community all the time. And, you're in good hands. Look, I want to help every retail trader. I think it's silly to be a retail trader and not be doing better. If you're struggling out there, there's ways to do better, and maybe it's just a tweak of your strategy. Maybe it's a tweak of your risk. Maybe it's a tweak of your profit. But I don't know. Honestly, it's probably just risk management. I think that's where most retail traders are terrible. Most retail traders can find a trade, but most retail traders are terrible at risk. They manage risk like idiots, and they take big losses, and then they, trade it too big, and then they lose too big, and then they scale down, and they try to, let's say you lose thousands of dollars, and you're going to say, oh, that's too much risk, I'm going to trade less, and then you're going to nickel and dime yourself and try to win back thousands of dollars with pennies on the dollar. It's the Mike Tyson quote, everyone has a plan to get punched in the mouth. When your punch in the mouth is taking away thousands and thousands of dollars from you, and now you're going to earn it back at dollars at a time, you can still do it. But if you never took the big risk in the first place, you survive the market. And don't let the market take those big dollars. And I'll make it this simple. If you survived this 20% correction, you killed it this year. If you survived the 5% correction here, the 10% correction here, the 6 to 7, 8% correction here, you're killing it right now. If you survive the 10% correction in 2023, if you survive the 30% correction in 2022, if you survive the 30% correction in 2020, you have to survive them. So when traders blow up their accounts on one silly correction for a 3, 6, 9 month window, a year window, if you can't afford to trade anymore, you're trading too big. You have to survive this crap. This market is built to go higher. These companies are built to be bigger. These companies are being built to be more profitable. The amount of market cap we have right now, it wasn't that long ago that we were like $1 trillion market cap for a lot of these like top stocks. Now we have 10 plus stocks that are over $1 trillion. We have like $15 trillion just the Mag 7. It's crazy, man, how big these companies have gotten, how big. Companies in the US are bigger than entire countries and continents. Like they're huge. So it's a blessing and a curse, So anyway, we just had to keep trading. All right, good stuff. So let's see how the rest of the day is going. 3:53, 7 minutes left. I'm glad I got a double ups with a couple of bucks. Let me see how these are trading right here. So let's go. I'm just curious. I think I was in the dead zone on both. I actually managed that pretty well. I'm just a little happy. Yeah, this is down to 75 cents. I closed this one for $2.25. It's now $1.50 less. This one I closed for 80 cents. It's now worthless. So that would have been a risk of 135. This would be a risk of about, I'd be down like $300, and instead I end up grabbing, I don't know, about 50, 60 bucks quickly on the day. So 50, 60 bucks a contract. So I'll take that as a win. Look, a lot of drama tomorrow. Just buckle up, take a deep breath, put on the hard hat. We're going to, whatever's coming our way, let's figure it out. If the market rips higher, okay, cool. Honestly, I probably have more short-term risk to the upside than I do the downside. The way that I position myself over these next couple of weeks is I am kind of doubting the stretch of this market without causing a freaking top. And again, maybe I'm wrong, but I think that having this many days and this many weeks above the 50-day moving average, not having a pullback this entire time, I'm questioning the momentum. So I'm positioning for it. It's defined risk. I'm hoping that I don't take a couple of those short-term losses, but if I do, I'll be fine. Meanwhile, I'm still melting up to all-time highs. This is a new high today at 550 and change. Hopefully there's more to go before the year is done. I'll just stick with the process. Okay, so expect a lot of volatility tomorrow. The market for the day has done pretty much nothing. Market makers, congratulations. You did your job exceptionally well 2 days in a row. Actually, 3 days in a row. Okay, Thursday last week was a pretty big push, but Friday was perfect. Market maker wins. Monday, Tuesday, market maker wins. So we opened up today at 26. We're down to 11. It's only a 15-point move on the day. That's nothing, man. Like, I think tomorrow the market kind of gets ready to blow out some volatility. Let's see it happen. Okay. All right. I see some comments going in the chat. Good stuff. All right. What are the questions? Any other charts, anything else you're looking at today? We're into the final 5 minutes here. Price is moving all over the place. Looks like that 65.15 seems to be my big gamma level by the end of the day. Part of me wishes on my call fly that I pinned this thing at 15 instead of 20, but it worked out fine. But 15 would be, to be up about $300 right now. Oh, actually more. It might be if it was pinned. It was a trade at I think I could have gone. I'm trying to think 10 wide for $8. So it'd be, I don't know. It'd be up maybe $200 to $300. But tomorrow's a new day, and it seems like 15 seems to be the closing price here as we're getting closer to the end of the day in 4 minutes. If we have a big scream to the upside at 20, then that would have been really lucky on the call fly. I'm just not there yet. I close out the trades. But if you're managing, you're looking for some profit net. Forex update. Sure. Like I said, I don't like the dollar index as a sell. I think the dollar index is a fake out trade. And look, this doesn't all happen tomorrow. It doesn't happen tomorrow. I think in Forex, you're going to see something like this. The market maybe breaches this low, fills some stop loss orders, activates some stop loss orders down here, dries up that liquidity, and then goes after a reversal. I think this market pivots off of some divergent lows. We go back up into 100 or 101. That's just my thoughts. I think this is more of a flat pattern, one of the worst starts to the year for 40 plus years in the dollar. I don't think that this is done. Two ways I see this playing out is we're down here. We have a flat pattern that comes back up to 101, or we have something like this where we go maybe from high to low, lower high to lower low, lower high to lower low, and this becomes a falling wedge, and eventually the dollar gets a squeeze. Okay, but that would take longer and be more of this grind to the downside, and that would mean probably more melt up and grind to the upside in the equities market. I think the timing of all this is we're due for a correction. And what's silly is I've been saying that for about a month. But I've been enjoying the melt up, not trying to get in the way, not trying to call the tops. All my tops are being called with mechanical strategies, daily profit play mainly. And like I said, I probably have more short-term risk to the upside. I want to see price stay below 66.50. I want to see price stay below 6,700. There's a lot of money to be made for me in the next 2 weeks if we see price back below 65.50 or 6,500. Time will tell. But I'm embracing all the risk. I know what the trades are. Okay. All right. So Forex update. Let's go through some currency pairs. Today, probably a minimum volatility day. Currency strength. We got Swiss on top, Euro on top, dollar weaker. Okay. We did have some movement today. Dollar weaker. We had some flows. That's a pretty decent stretch in volatility. I am long Aussie CAD and still holding to my profit target up here towards 93.70. Aussie Swiss down, but I'm still looking to level in. Aussie Yen, nothing on this one yet. Aussie New Zealand, I'm still long. I could take some profit on my Aussie New Zealand. This has been a good trade since 108, 107. But I'm trying to take this positive swap trade into 114. So I'm going to try to hang on to this one a little bit longer. I like this 114. So any dips, all these black lines are levels that I've been looking to buy that Aussie New Zealand. I didn't get filled at 106 or 103 or 100. I'm just looking to buy it up to the 114. So if we get up to 114, I'm out with profit. Interesting push down to the end of the day. Right now, we're at 05. Are we closing? 05. I mean, I'm glad I closed out the butterflies when I did. All right, we're at 66.06. Okay, so it definitely took some active management for the day on those trades. We're at 66.06 for settling. We've got a plus minus on the day tomorrow for like 40 some points in SPX. There's a 40 plus or minus 42 on the day. I mean, we're going to see some volatility by the end of the week. That is for sure. Okay, keep going with currencies. Aussie dollar, open space trading. I think if you're buying the dips, okay. Nick, I see your comment there. I did have a conversation with Nick and the team at A1 Trading. I'm going to be on some more live sessions through the week. Anytime there is a U.S. news announcement at 8:30 in the morning, I'm going to jump in and join them. Nick and I will just collab a little bit for the early morning session. So, like this morning, I was actually on with A1 Trading this morning at 8:30. I think on Thursday I'm on as well. I'm actually hosting a session for them tomorrow at noon. I think I'll be on tomorrow at noon before they jump into the trading battle at 1 or 1:30. So I'll be on the channel. You can look for me. Yep. Okay, Aussie dollar. I like this kind of buying dips towards open space at 68. I think if we get a dip or a pullback on the dollar, that's fine. Dollar pulls back. I still like buying dips on Aussie. CAD Swiss just can't get out of its own way. I'm just kind of patient here. This actually stopped me out on CAD Swiss. It's fine. It's annoying, but again, I'm just looking at divergence on multiple time frames, and it just hasn't turned. I think the best way for me to trade this CAD Swiss is rather than going paper cut to the downside, is just wait for price to do this. Wait for price to turn. Okay, wait for price to turn. So if we get price to turn up and break above a 25-50, especially the 50, the 50 has been a really strong trend here for a while. If we get price back above the 50-day moving average, we're probably going back up towards a 144 to 200. We're probably coming back up towards maybe this outer trend line. If we break this outer trend line, we're putting in a bottoming pattern. So I just need to wait, and I will. I'll wait. CAD yen, no trade. Swiss yen, back up to highs. I had mentioned watch for this pattern. We either have equal highs right here, and this thing falls on the right-hand side, or this thing is going to go to some type of topping pattern, sweep the lows, and now we have a right side of the trend line trade. So Swiss yen could end up being a really good looking trade here sooner than later, but obviously give it time to set up the pattern, give it time to break the trend line, and then we'll have a nice trade running on that one. Euro Aussie, nothing. Euro CAD still making higher highs on this trend. Euro Swiss, I'm still long. I'm just waiting to get back to like 96, 97. Euro Pound, no trade. Euro Yen, similar to Swiss Yen, maybe something like this. If it comes back and hit resistance, if it comes back to hit resistance, is it a trade like this? Breaks the trend line, right side of the trend line, and then we roll back over. Okay. If my Japanese yen trades like this happen, if they play out this way that I'm drawing on the charts, that's not a good thing. That would be some nasty risk-off trading. I don't think anybody wants to see that. So you should encourage the Japanese yen to stay weaker if you want to see new all-time highs in the stock market. Just saying, that's a huge deleveraging, huge risk-off trade if the Japanese yen gets very strong. So I'm not planning on that without confirmation. Euro New Zealand, no trade unless this resistance hold at 2.00. Euro dollar, we are hitting some fresh highs. Okay, I'm not going to chase these highs at 118.50. I'm going to wait and see. Like maybe we poke up to 120 and then we fall. I'm looking for a bit of a topping pattern. I think the dollar is a bear trap. Pound Aussie, this actually looks like a pretty good trade. If we get a pop to the upside, a low risk, I think low risk, high reward. We could buy low, take this thing back to range highs at 2.10. It's not a bad trade. If price confirms, I think that looks good. Pound CAD, stay out of that one. Pound Swiss, I'm still long from this 107 handle. Pound yen, no trade unless we sweep this level at 195. Maybe a bear pattern there. Otherwise, no trade. Pound New Zealand, just range bound. Pound dollar. I didn't get the trade that I wanted. I tried to buy this thing at 130. 130 didn't fill. So no trade. New Zealand CAD, I'm still long. My measure move is up here towards 8,500, 8,550. New Zealand Swiss, watching to see if we can form a bottom, break some of these trend lines. Look at this. Speaking of trend lines, look at this garbage. This is the daily time frame, right? All this has been bear trend. So if we turn the corner, start breaking above these moving averages, I think we put in a bottom. Maybe this is double bottom. It's going to be, time will tell. But I'm just trying not to get stuck in a bad trade. So I'm just trading very small. I'm being patient. I'm waiting for some key levels like, maybe a 46, maybe a 45. How much lower can the New Zealand Swiss go? I have no idea. But if it turns the corner, I think we put in a multi-month or multi-year bottom if we turn the corner. Okay, New Zealand yen, nothing. New Zealand dollar, open space. I still like this one. I think Aussie dollar is actually better. And dollar CAD, if you're buying dollar CAD, you got to be prepared to buy down here at 34, 3,300. I think we go back to 145. I don't know if oil is going to get that weak though, or oil is going to get that strong. I think oil is sticky. I think the dollar's probably a better currency pair than the CAD. I think the U.S. is a better economy than Canada, but we're right in the middle, right? There's clearly resistance here. Maybe it holds in the near term, but there's a lot of support to buy lower. And I think because we had this run to 45 or 46, I think we can make that run again. So I don't have a trade on dollar CAD unless I'm buying low at the range lows. Dollar Swiss, backside of the trend line, fresh lows. To me, this is a perfect spot for a bear trap, just like the dollar index. If it bounces off the backside of this trend line right here, backside of the trend line, we go up on the dollar. This could be a nice little 3 to 5 wave move. Maybe we come back into these pockets and efficiencies. I need a reversal pattern though. I need to see something bullish. I need to get back above the 50-day moving average. Dollar yen, I think Swiss yen, euro yen are better setups right now. Dollar yen's okay. I just don't know if the dollar's really going to turn the corner that hard, or if we get back up here towards the big range, still around this like 159 to 162 zone. Be patient on the yens. Okay, there's your currency update. So where we close for the day, 66.06. Market's down slightly for the day. FOMC coming in hot tomorrow. All eyes on FOMC. That's all that's going to matter tomorrow, honestly. We might have a very quiet morning. We've had 2 quiet days so far, and tomorrow might just be all eyes on the Fed. We'll see how it all lines up. I do not want to be in directionally neutral trades later in the day. So daily profit play tomorrow morning. You're all welcome to join me, 9 a.m. Eastern time. Let's see if we can find a trade through opening bell, and let's see how it prices out. Okay, good stuff. Thanks for being with me on the final hour. Is the Fed making a mistake? No, I guess we'll watch price. I think the Fed is kind of rendered a little bit more useless than usual because fiscal policy is so strong and dominant right now that all they can do is control the short end of the curve. And it's like the Fed has been backed into a corner, right? Labor market's been disappointing, and the Fed knows it. Inflation data has been sticky. Fed knows it. But we've also had higher for longer rates, and it's time to acknowledge that if we want to have growth, we got to have some inflation. And whether inflation goes from 2.9 to 3.1% doesn't matter. If we're going to choke off growth, it's gonna crush the economy. So if we have 2.9 to 3.1 inflation, but we can grow at 4, 5, 6% GDP, that's what the Fed, that's what the government wants. The government's trying to push that, so the Fed will just cut rates, be more accommodating, and they can kind of spur along this growth. But we'll find out. There's a lot riding on this Fed day tomorrow, and like I said, every day we'll assess. If something looks interesting, I'll be here to talk about it. So. All right, buddy. Thanks for being here today. I'll see you tomorrow morning at 9 a.m. Eastern time. Daily profit plan. You can join me inside of Telegram. I'll share that link right here. If you'd like to join my Telegram, it is free. There you go. So Chris Pulver Telegram. There you go. If you'd like to opt in to my daily sessions in the morning, there you can join Telegram, get the link that way. And also I have another link that I'll share here for the daily profit play, daily profit plan, 9 a.m. weekdays. There you go. So a couple links to share. Okay. All right. Tomorrow morning, 9 a.m. daily profit plan. See you then. Big day for the Fed. Also watch this Wednesday. I kind of jumped into this playlist today, or this watch list today, with my pinch point scanner. So we found some good trades today, and took 3 fresh trades in pinch point. So those are pretty good mechanically. I like them. We'll give price time it needs. All right. Sounds good. Thanks. See you tomorrow. Bye.